Hello everyone, today I want to discuss the trade I took on EU yesterday after news. So first, if we start a new day, we're gonna look at Forex Factory to see what kind of news we have that day. So on Thursday at 8:30 AM we had some dollar news, red folder. So I was primarily focused on trading after news. So if we can see, let's mark out our news at 8:30. So that's around here. First, we're gonna start our day on a 4-hour chart, and as we can see, order flow is clearly bearish, and if you want to be a buyer, you would need a ton of red folder news to inject liquidity, because if we have a look here, we have a high, a high, a high, a high, a high, another high. All these are highs, meaning resistance, and so this, if you want to be a buyer, is a high resistance liquidity run. So our focus should be on shorting, right? Because order flow is clearly bearish. Plus, if we go down, imbalance, not a lot of resistance, meaning this shorting is favorable because it's a low resistance liquidity run, right? So we're gonna hop on the 1-hour chart. So we can see, is this low? Was this a liquidity grab or is it a market structure break? Well, we clearly have big imbalance, big push down, closed candle below this this low over here, meaning this is a bearish order flow giving market structure break to continue going down, right? So let's go on a 50-minute. So this is where you start off your day. First, we're gonna highlight our Asia range. That's from 8 till 0030. So what can we see? We actually can see that this high got taken out, and then the move started going lower. But actually, price was trading into this. Let's just mark it out, into this 50-minute order block. And then price moved down, so we cleared out some buy side liquidity, pushed up, broke down lower. Now let's hop into the news. So, oh no, wait, we've got something. After this liquidity grab, market shot into a market structure shift, and then this low created market structure break. Full bodies going lower, give prices telling you here that it wants to drop lower. So we had our push down. So if you go into the hourly, which is also our bellwether chart, we can see, oh, still a nice market structure break. We take our fib from this high till this low, and we extend out in time, and we can see that in this region right here is our OT. So we want to be, oh, price is dropping right now. So we want to be a seller in this area, right? Wait, what's going on? Oh. So we go on a 50-minute. We highlight our zone, this OTE. What can we also see? We can also see a nice little fairway gap or imbalance up here. And if we hop onto smaller time frames, so this is our OTE, yeah? Our imbalance, 50-minute imbalance. But what do we have here? Liquidity, liquidity, liquidity. So this got taken before news. But if we hop on smaller time frames, what can we see price do before we run up into this liquidity and into this imbalance? I'll give you a second to look. Right before news, so this right here. I hope you already guessed it right, because Ice-T told this in his 3rd or 4th episode on 2022 mentorship. So, what is this? One high, two highs, three highs. This is a free drive pattern into an imbalance, liquidity, and then we had our nice little trace into our OT, clearing liquidity, trade back into this imbalance, and then we broke lower on the news candle. So I was watching news, I saw this market structure shift. No, this one. This one is the clear market structure shift. It's the intermediate term low. Why? Because we have a higher short-term low to the left of it and a higher short-term low to the right of it, and we also traded back into this imbalance. So if we break below this low right here, we can truly say that price wants to go down. So I had my first risky entry on this 1 hour OB. Oh, I'm sorry. Let's extend this out in time. So this was my first risky entry. Why did I take this order block? Because we have here our main order block where price reacted off to it on the 1 hour candle. Then this candle formed a bearish up closed candle, right into our previous bearish block. So this is a propulsion block. So my first risky entry was on this propulsion block, we can say. So I was short from here, and my stop loss was above the bodies because I didn't see price coming back again, because when the day opened, price already took out these highs. So this is a institutional sponsored high. And then let's go into the action. So my first entry was here, right? Then we broke down, and I saw on the 3 minute that this here is a nice breaker block, right? Why? Well, because we have a low, we have a high, a low, and a higher high, and then we broke down. So this is a bearish block. So when price was dropping, I had my first position here. Then when we broke below this low, I took my second entry. It was a risky entry because I prefer to, when price breaks below a breaker block, I like to entry first. It gives the best entry most of the times. So this position right here was trading into profits, so I put my stop loss at break even. I took some off on the 1 minute, and right here I took some off here because it was also a bullish breaker. Why? High, we have a low, a higher high, and then lower low, clearing this, and then we broke high, right? So let's mark this out in time. So I took some off here. Let's hop onto as you can see, close some here. My first entry was above here, second entry below this breaker block. You see? And then price hit my break even on this entry, but I wasn't scared, right? Because I knew what I was doing. I wanted to see price going lower. Why? Because if we have a look, this all is a, what can we say about this side of the curve? This is the buy side of the curve, then we have sell side of the curve. So meaning our market maker sell model was loading, because right here we have a high time frame resistance, and then we have a nice little market structure shift, and then comes the funny stuff. So I was also watching the 50-minute time frame, and I saw, let's go on the 50-minute, and then I saw this order block, right? This is a order block. So I kept in mind, okay, we could actually trace into this order block, but what do we also have here? Nice little imbalance. So we have our breaker block, we have our order block, and then if we hop onto smaller time frames, what can we see price doing again? Do again? Yeah, you're right. This is also a free drive pattern. So as soon as my two positions right here got stopped at break even, yeah, I loaded two extra shorts, But as soon as I saw this 3 drives per adding into this 15-minute order block, I knew directly, okay, if price breaks below this low, we can actually say that price wants to go down uh, with full confidence. So I marked out this failure gap. I was watching price come back. It hit the threshold of this bearish block. Bodies respected this failure gap a bit, then it broke higher, trading back into this breaker block. Oh no, into the 15-minute order block. And then as soon as we left this failure gap, I took another entry, and as soon as we broke below this low, I took also another entry. So for targeting purposes, I was looking at this low. Why? Because this is our original consolidation before the move up, and if we wanted to have to monitor price action, we could also see on a 5-minute that we have a little failure gap over here. Price broke down, so let's mark out this failure gap. Then we're gonna mark out our 50% of that BPR. So what can we see here? Price broke down, traced back, consolidated a bit, then broke lower, right? So this is our first distribution. Then price broke lower again, market structure break. What can we see here? Nice low failure gap. Price broke down, so meaning the same BPR, right? In this BPR, if we want the small time frames, we saw that this high got taken out. So actually it was accumulating more short orders, right, before the next distribution down. And what did price do? Distribution, or accumulation, distribution. And that's how you trade EU, guys. I hope you're not missing out on this, because ICT is giving you a lot of gems. And all this trading is from ICT. So yeah, good luck on your journey, guys.